I'm joined here in Berlin by Rachel Arnold. She is at Vista Equity Partners, specializes in software investing, specifically when it comes to the lens of the private markets. Rachel, a pleasure to have you.
Thank you for having me.
Of course, we're thrilled to have you. We're thrilled to I'm thrilled to nerd out a little bit here with you, because I think we talk so much about these private markets, maybe taking the tone from the public markets a little bit. So if we're seeing instability, if we're seeing volatility in the stock market, in the S&P 500, or even any other equity market around the world, how maybe secure or insulated are the private markets from that? And I think you're the perfect guest to talk about how that shows up in the tech space.
I appreciate that. Obviously volatility affects all businesses around the globe, and I think we were all thrilled to see the public markets start to stabilize a bit this past May. That said, the private markets have really normalized over the past 24 months. I think as we came out of the post-COVID period, we saw a really strong return to fundamentals, a focus on quality, and a focus on, at the end of the day, a new growth playbook. The businesses that we focus on, enterprise software companies primarily based in North America, really have kind of catalyzed around this idea of how does growth become sustainable through things like generative AI, classic operating practices, and then a return to profitability. And so I think you're seeing that reflected in both the deal flow as well as the valuations on the private side.
Talk to us about that deal flow, though. How much appetite is there right now? I feel like the AI momentum story has been certainly one that's shown up for quite some time. Is there still seeing that same excitement, that same optimism?
Absolutely. There's never been a better time to be an enterprise software investor, candidly. And I think AI is actually one of the strongest growth drivers we've seen in the history of enterprise software. With AI, we're seeing an incredible increase in productivity. And so when an organization buys an enterprise software product, on average, they get a 650% return on that investment before AI. And what we're now excited to see is, does the improvements from a productivity standpoint, are they incremental or are they exponential? We have a handful of companies in our portfolio that are leading the pack on this front, and I'm excited to say that actually not only are we seeing more of those exponential productivity impacts, we're seeing incredibly increased market opportunity for those businesses themselves.
How does that affect, perhaps, I know you operate in the small cap space specifically, yes, but when you're thinking about the deal-making pipeline, when you're thinking about the capital markets, perhaps having a delayed opening or a delayed kind of return to their former glory, for lack of a better term, how does that affect the small cap space specifically?
Yeah, what's great about the small cap space, so these are companies under 50 million in ARR. There's over 90,000 of them worldwide. And what's great about this part of the market is that companies that raised money in 2019 to 2021 are generally starting to look at the end of their cash runway. And so not only is there a distinct capital need, they also have conserved cash to wait for those valuations to come back, which means that their growth rates have been more muted more recently. Now, so for investors like us that care about capital efficiency, that really are thinking about the fundamentals of the businesses, we're able to partner with these founders in a really unique fashion that, candidly, at the height of COVID and during the market run-up, there was a little bit more attention paid to these companies than there is now. And so it's creating just some really incredible investment opportunities. Actually, our deal flow is up, and I am excited to see kind of that play out through the rest of this year and next.
How do valuations factor into that? And again, I'm thinking of this from a very public market kind of standpoint here, where I think a lot of investors are looking around the world and they're saying, well, okay, Europe is looking kind of hot right now, and maybe technology requires a little bit more of diversification. You're talking about exposure in the United States in a place that is kind of the buzzword in technology right now, which is AI.
Yeah.
Does that mean higher valuations?
For enterprise software specifically, I would say we've seen a normalization, and it hasn't actually gone up dramatically based on AI itself. I do think AI native businesses, so businesses that are built with AI technology underlying and or have products that are very AI forward, are getting top of the market, almost market run-up level valuations. I think we've seen that in some of the deals noted most recently, but I also think it's early. We haven't had a significant number of proof points yet, and so we're excited to see how that plays out as we get more companies bringing these products to market and as they're getting financing.
So talk to us a little bit about where the private markets kind of maybe bridge the gap in terms of things like financing, but also equity raising as well, when it comes to actually maybe accelerating the adoption of some of these new kind of enterprise software products as well.
Yeah, absolutely. So most of the innovation is happening on the private market side. So when you think about 100,000 software companies globally, 96% are private and 90% are under the 50 million ARR mark. And so it's a very large pool. I will say that the partnerships with the Anthropics, the Microsofts of the world are really the ways that these companies are starting to think about innovating and building the next generation of their solutions. That's actually something that we've really leaned on, are those types of partnerships to fuel that innovation. As it relates to how that translates into new products and longer term, the valuations, I think it's early, but again, very promising from an outlook standpoint.
Are you seeing any sort of pressure in terms of not only speaking to LPs at the conference perhaps, but also just in terms of being an American company operating in California and in this kind of very niche and frankly innovative sector at a time when perhaps momentum is shifting abroad? Are you getting that sense here in Berlin?
I haven't had quite that level of kind of feedback from our investors here in Berlin. I think that it is more muted, I think, in terms of tone, just given some of the geopolitical uncertainty. That said, I think there is a lot of excitement around AI globally. And I think there's more of a focus on that innovation than there is necessarily the geographic kind of focus of the businesses. And most businesses, from a software perspective, are developed in the United States. And so I'm seeing European investors still be very excited about the opportunity to invest.
And who are you speaking to in terms of getting that kind of opportunity? Is it international investors still flocking to a small cap space when perhaps the large caps are a little tapped out?
Yeah, I think investors have always been very excited about the small cap opportunity, just given the volume and given the opportunity set broadly. Right now, I think that also because there are so few institutional investors that are really understanding AI and are able to tap into it, it's creating a unique opportunity for those that lean in, which is where I think we're having a lot of conversations this week.
It's a fascinating one, and certainly one where we kind of see a little bit of those dots connected. Rachel Arnold, a pleasure to have you here.
Thank you for having me.
And of course, joining me right here in Berlin